Full of you on here. We are just trying to get our settings set up so we can dual stream this. Give us just a moment. We'll be ready to rock. On YouTube? I do. We got nothing on X. You want me to just go do this straight from YouTube TA channel? I can't though. Hmm? I mean, I can, but there's like 6 people on there. We don't have a ton of followers over there. Not now that I'm live. I would have had to log into the Facebook thing before. Not what you're on. Are you seeing any on the TA YouTube channel? Okay, I'm just not seeing that on my side.
Dad, can you get me something to eat? Dad. When do you think we're gonna finish that? No, like
All right. All right, guys, good morning. We've got about 8 minutes till we get started here. I want to give everyone a chance to log in. But welcome. Happy to see you all. Hopefully you guys are gearing up for Christmas. Derek, if you can see this or hear this, I cannot see the YouTube questions. I'm doing a multi-stream here. So I'm trying to put this on X and a couple other places. So if you would, just shoot those YouTube questions over to me as you see them. Let's see if they pop up over here. Nope. All right, got about 7 minutes here till we get started. Now, what you're looking at here is a chart of palladium. Now, this is one of the two trades I do every Tuesday. We got a really, really clean breakout there. I bought this when I just bought 50 shares. I tried to put the order in to kind of show everyone how to do it, where to put the stop loss, how to place the orders. But it's had a really nice move. I mean, we got in here, we're up, what, a little over 18% in 2 weeks. And that's a really strong move in something like palladium. You're talking about the entire metals market up 20% in 2 weeks. And that's typically a strong move even for a stock. So really, really clean breakout. And today we're going to walk through how to do this. I'll show you the pattern we're looking for. I'll show you how to identify the leading stocks. And I'll show you how to do this. I think our initial risk on this position was 4%. So a risk 4%, we're up 18, which means we made 4.5 times our risk, which is phenomenal. Probably take some of these off here this morning into the open and see if the thing continues to run. But really, really strong environment. And this is really when everything comes together. You've got a good, strong market. You've got a leading theme to that market. You get a top stock in there breaking out and just makes a nice, strong move right as it comes through that breakout area. So we got the S&P 500 set to gap up a little bit. NASDAQ gapping up as well. Russell gapping up a couple of points. We've got gold breaking out here, making a nice run as I've been calling this as a great place to buy in this kind of 4,300 area. It is coming out just as we expected. Silver, which we've been in since this breakout back here at 42, right in here, 41, has had a phenomenal run, up 70% in just the last 4 months. And that is a phenomenal move when you're talking about something big like the metals market. So it's not just an individual stock making that move. And again, it just kind of follows the same pattern we see over and over again, which is that, the stocks, or especially commodities, when they trend, tend to take this stair-step move. It runs up and then consolidates and bases and runs up and consolidates and runs up and consolidates and just continues this stair-step higher when you get these big power trends. So each one of these points was a great entry into the gold market. You want to see this kind of shallowing basement formation here. Same as we got over in here. Just comes in, absorbs supply, shallows out. This is a big one that broke out in September. It has led to a phenomenal run. And it just continues to repeat this same process over and over and over again until it eventually runs out of steam. So really, really nice moves here. Hopefully you guys took my advice. You've been buying physical metals. I'm long gold. I'm long silver. I'm long palladium, even long copper. Which appears that it wants to break out as well. So this had kind of a big price correction back here in July, but then you'll notice that exact same pattern I've been showing you here. As you get a strong move, it consolidates, tightens up, breaks out higher, one little retest, and then, continues that push higher. So got about 4 more minutes till we get started. I'm going to cover everything today. We'll start at the beginning with the stages of the stock cycle. We'll follow the leading groups of the market. We want to keep a laser focus on where the money is flowing. And when you look here, you see the mining space still very strong, continues to show up in our top performing areas over 1, 3, 6 month periods. The energy play is somewhat cooling at the moment, although I think alternative energies are still strong. So we're getting some rotation here. So notice steel looking really strong, rising up the ranks. We'll take a look at SLX. This is the steel ETF, and you can see the breakout taking place here. We'll look at some steel stocks we can buy. So again, just following the overall theme of the market, staying focused on the areas that are outperforming, where the big dollars are flowing, and looking for these really clean breakout or pullback points where you can buy with 4, 5, 8, 10% risk and make 20, 30, 40 plus percent potentially on the upside. So this is, again, that palladium trade that we took 2 weeks ago, and it's done very well. Currently about 17% from entry, all on a 4% risk. Okay. 2 minutes left. I'm going to start here on time. Okay. Yep. Still not. I don't see it showing. So just let me know what the questions are in there, and I will do my best to answer them verbally. And if you want to just screenshot the whole thing there every once in a while, Sean, and just shoot it over to me, that'd be fine. Whatever's easiest. All right. It is now 8 o'clock Central, 9 o'clock Eastern Time. Let's go ahead and begin our live stream. So, welcome. Hopefully, my Traders Agency members have logged in here. If you haven't already and you want to join us, we do a live weekly mentoring session every Monday. We have another one every Thursday with myself and our analyst, Jean Fade. We also give you access to our TradingView indicators that track the leading industry and the market strength. We do trade calls, a lot of other stuff. We have a YouTube special. It's just $5 for the entire year. So if you're interested in that, go to tradewithross.com. Tradewithross.com. It's $5 for the whole year. You get access to it. No strings. It's the best value you're going to get. Okay, so let's go ahead and dive in here if we can. And I'll start with the stages of the stock cycle. And a lot of people don't realize this, but every growth stock, whether we're talking about Apple or Amazon or Google or any stock in between, goes through this same four-stage stock cycle. And I'm going to leave it up here on the screen here. Let me shrink this just a bit so I can fit it all on here. And this is what it looks like. This is a weekly chart of Roku stock. And I've got each of the 4 stages marked. And I'll walk you through them real quick. So essentially what you need to understand is that it is institutions who move stock prices, right? It's not you and me and Billy Bob Smith down the street. It's the hedge funds, the endowment funds, the pension funds, the large multi-billion-dollar operations. So first thing to get out of your head is quit trying to outsmart them. All right, whatever they're buying is going to go up, whatever they're selling is going to go down just due to their size. So our job and what this tries to do is interpret what the institutions are doing with a given stock. Are they actively buying it? Are they actively selling it? Because that's going to determine the direction. And these are the 4 stages a stock goes through. So typically, it starts out in stage 1, which is the accumulation phase. You have a stock that's kind of treated as a value stock, or it's cheap. It's kind of bouncing around in a low dollar area. And this was the COVID sell-off here in 2020, which is why it went below. But in a normal world, it would have just kind of bounced in this sort of 120 to 160 area for about a year. And this is when institutions are accumulating the stock. They're trying to build a large position in it. And then eventually the stock reaches stage 2, which is the markup phase. And in stage 2 is where the magic happens. This is where you make all the money. This is when the stock is in demand. It's being bought big by these institutions. And when they're buying, They buy consistently, every day, every week. Usually it takes them a couple of months to build a big position. Buffett, for example, took him 2.5 months to build his monstrous Apple position. And so the beauty about stage two is you've got this constant buying support. You have these institutions buying every day, every week, trying to accumulate 50, 100, 200 million shares of the stock. And so any 5 or 10 or 12% dip is usually bought by them. So any little drop, they have all that. Great, we're going to buy more, and it gives it support, and the stock tends to rise very smoothly across that red 50-day moving average. And a stock can be in the market phase for any number of reasons. It could just be doing very well in terms of sales and earnings, big growth. It could be in the right place at the right time, just like every AI stock has done well the last couple of years. Every nuclear stock has done well this year. Every gold miner has done well. It's the trend. It's the theme of the market. Everybody's buying in. And eventually that party runs out. You enter stage three, which is when the big institutions get out. And even though they're tactical in their buying, they just tend to dump on the way back, and you get these big drops. And you'll see the stock get real volatile. So if we look at stage three, notice how here in stage two, it just kind of rode that 50-day moving average up the whole way. Real clean, no big dips, no gyrations. And then you get this massive dump under the 50-day, rises 20%, drops 30%, rises, drops. That volatility is the big guys getting out and the little guys getting in. People are trying to buy the dip. They've watched the stock soar. They want to get into discount. And this is the big problem, is most retail investors are buying in stage three. That's why most of them lose, because they've seen this stock surge and they go, finally, a pullback. I'm going to buy the dip. And in this case, it worked temporarily before it rolled over. Sometimes it'll sell and just kind of do this and then capitulate to the downside. But either way, stage three is not a buying opportunity. This is when the big guys are getting out. And once the big Wall Street funds are out, once you don't have that consistent day after day, week after week buying, then there's nothing left to push the stock higher. And once all the retail and the value investors are in, it just begins to fizzle, and then it just run stops, and it's kind of a game of uncle. And most stocks in a stage four markdown will fall 50 to 80%. And if you don't believe me, go look at anything. Look at what they did in 2022. Go back and look at, PayPal, for example. Let's go to a weekly chart. Look what this thing did in 2022. Fell 78%. Let's look at a stock like Google. Okay, put it in logarithmic scale. That was about 45, so almost 50%. But look out through here. When it goes through these stage four downtrends, it is going to fall in a big manner. And so our goal is simply to get into stocks in stage two. Now, we don't need to buy at the beginning and sell at the tippy top, but in that green box, in that stage two, that's where opportunity lies. And so what we want to do is find these precise points where we can buy. And to do that, we're going to follow this little breakout pattern. Now, this is, again, one I mentioned. This is one we did in Palladium, P-A-L-L, in our Tuesday trades. We bought right here in the emergence, and we're currently up about 17, 18% in just the last 2 weeks. So this is what you're going to see in these breakout patterns, okay? Firstly, you want to see a big run to the upside. If the big funds, the big institutions are buying up a stock, if they're all, accumulating, it's going to be rising. Don't be scared of a stock at its highs. You don't want one off the lows. You want one that's up 30, 40, 50% the last few weeks. That shows you the big guys are buying. And then once it's made this big move, you want to see it kind of consolidate. And you've got some profit taking as the stock pulls back. If these institutions are still buying, they'll drive it back up. There's a little bit more profit taking. And what's happening here as this stock kind of shallows is the supply is being sucked out of the market. And, some people are scared out from a downgrade or an earnings miss. Others are shaken out because they do a big spoofing order and run the stop. Some are just bored out because they've been holding this thing for 2 months and it's gone nowhere. But either way, it forms this kind of shallowing pattern here on the chart. And once it does that and it tightens up, and by tighten up, I mean the dips get shallower and shallower and shallower. Once it emerges from the top side, once it breaks through what has been resistance and resistance and resistance and resistance and resistance, once it gets through there, that's where you want to buy. That's where they've exhausted the supply, and that's when the stock is concentrated into the strong hands and is now free to run higher. Because the stock market is just a function of supply and demand. If there's more demand and supply, more people wanted to buy than sell, it's going to go up. If there's more supply than demand, it's going to go down. So what this does is say, okay, we have demand. Clearly, there's demand for this stock. I mean, it's rising. It's up 40% in the last month and a half. Okay, so how do we get to a point where there's limited supply and a lot of demand? How do we get to where everyone's trying to buy something, but suddenly there's not a lot of it left? That's what this shallowing pattern does. A bunch of sellers take place here. A few less sellers. A few less. A few less. And the tightening shows you there's fewer and fewer shares available to trade. The big guys, the Goldman Sachs, the Warren Buffetts, the medallion funds, the pension funds, they've gobbled up all the $120, $130 shares they can until no one else is willing to sell at that point. And so then, if they want to keep buying, they got to pay up. You got to say, would you take 140, 145, 150? That's what allows the stock to break out quickly. So this is our kind of our go-to bread and butter pattern in this period. And if you look at, again, we can look at gold and see very similar action. Look at it over in here. Clearly, there's a lot of demand for gold. In this case, it's the central banks buying up tons of gold. It's retail as well. It makes this big move from 2,500 to 3,500. It pulls back. And then it just kind of shallows and shallows and shallows. And where is the resistance? Where is the selling coming in? Well, right here, kind of near this line here, right in here, right? That's where the resistance is. It can't get above this sort of 3,500-ish area. So when it does, that's when we know we're through the supply. And that's when the stock or the commodity or the crypto or whatever is then free to make its big, quick run higher. And it's breaking out again now. Look at the same pattern. Same kind of shallowing idea here in gold. So you had this 11% drop. Then you had about a 6.5% drop. This was about 2.8%. This last one only about 2.3%. So it's tightening, 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 tightening. And then look how it's breaking out right here. So perfect time to buy gold coming out of this move here. Okay, questions on this? Does this make sense to everybody? Somebody mentioned silver. Yeah, silver is just surging here. And you've had a couple of good breaks. This is a really good buy point back over in here. See how it dips and then tightens up and shallows, emerges, and just immediately shoots higher. It then kind of comes in again, breaks out. Big move. This was a shorter one here, but same kind of idea. You've got to shake that supply out before allowing the thing to run higher. And so ideally what you want to do is you want to buy as this thing breaks out, and then you want to add in as it pushes higher, and so you can build up this big position as it rises. And the same thing is going to be true with stocks, right? So if we look at some of our stocks in here, let's look at, this is what we did at Robinhood. See, we got the breakout right there as it emerged. OKLO is another one. You see this huge run higher. It then needs to absorb the selling, shake out the leverage people, the weak hands, etc. And then it just explodes through the upside. This is a 120% move in 36 days. And if you're looking at this saying, well, Ross, yeah, but it went back down, you're missing the whole point. Our goal is not to find stocks we can hold for the next decade and a half. We're looking for a big, fast move. I mean, even this, that's 68% in 11 days. Sell it. Take the money and run. Let it stop you out if you want. But, if you can capture these big upside moves in these short windows and just roll it over and do it again and again and again, that's where the big money is going to come from. This was QBTS. Look at this one. You can see the pattern there. So this was formed the same thing coming off a low. The same kind of consolidating, shallowing move we bought here on the breakout, and it just exploded from 8 to 20 in like 2 weeks. Okay, so how do we know where to look? Well, the easiest thing to do and the best thing to do is to focus on where the money is flowing. Okay, so we know the big institutions drive markets, drive prices. Great. Well, how do they trade? How do they invest? Well, they tend to invest thematically. They're not day trading. They're not going all in on one stock. They're taking a macro view and saying, okay, we think this is the area to focus on here. Earlier this year, that was nuclear energy. They said, hey, there's AI is the big thing, but NVIDIA and Supermicro, those already ran 1,000%. That runs over. They're fully valued. Where's the next stage? I said, well, there's a power crunch. They can't get enough energy to run these giant data centers. They're sucking 3-4% of the grid. They want 20%. It's not there. We don't have the transmission lines for it. So they're going to have to come up with their own power. How are they going to do it? Well, they can't do wind farms everywhere. They can't do thermal farms and stuff like that. But nuclear makes a lot of sense. It's clean. It's renewable. It's reliable. They can build a plant right next to data center. So nuclear seems to be a good area. So they buy up all these nuclear stocks. And when they did that, at the time, let me see if I can go back and show you. If we go back to like early May here, let me see if this is going to update these. There it is. So this was in early May. This was like May 2025. Look at where the strength was. Over 1 month, nuclear is the leading area. Over 2 months, nuclear is the leading area. In fact, if we let it go forward a little bit, I think it even came up. Yeah, so then it became a leading on the 3 month. And so this was the area where the strength was. And so you're sitting here in May and June going, all right, all the money's flowing into nuclear stocks. What are the nuclear stocks? Well, here's the list. It was OKLO. This was May and June. They were $25, $30 a share. It went to 85. It was UEC, which was $5, $6 a share. It went to 15. It was SMR, again, May with the strength there, and you see the breakout forming. It's shallowing up. It's tightening. It's coming out. We bought the thing here at 18, and it went to $50 in just 2 months. So you start with the market. Do you have a healthy market? Yes, good. Okay, where do I focus? Well, where's the money flowing? Which areas, which sectors are leading this market? And then you watch those stocks for good entry points. What are some good ones to buy this week, not 2 weeks ago? Okay, got a smart aleck. That's fine. We'll show you some. How does this translate into options like put and call spread? Well, if you think it's going up, you buy calls. If you think it's going down, you buy puts. Do you have a sector chart like this usable with Thinkorswim? No, we only got it for TradingView. I don't use Thinkorswim. This to me is the best platform. You'd have to just code something up. All it's doing is just looking at the price performance of these sectors. We're trying to take this a step further and code it up based on relative strength and the movement there. But right now, this just looks at a basket of 40 ETFs and says, all right, which ones are going up the most over the last 1 month and 2 months and 3 months and 6 months. And this is the full list that we're using for this. I'll pull it up here so you can see it. There it is. And we're just using exchange-traded funds to look at the performance of different areas. So this is building products and cloud computing and energy and food and beverage and home builders, etc. And you can do this the hard way, which is to do this and plot all 40 or 50 of these onto a single chart and then go back over 1 month and look at over 3 months and come up here and see which one is leading and see what that is. The easier way is just to use this indicator in TradingView. If you don't have it, it's included with our annual membership. It's $5 for a whole year. The link is tradewithross.com, tradewithross.com. It's $5. You get the live mentoring sessions twice a week for a year. You get these indicators. We put out a monthly trade pick, get access to our support team, tons and tons of stuff in there. No strength. It's $5. So go to that link, tradewithross.com, to get signed up. But what we're seeing right now is a bit of a shift. And sometimes it's very clear where the market is flowing and where the money's going. And sometimes you're in this transitionary period. And that's kind of where we are now. We're seeing biotech show some strength. We're seeing the mining and metals area continue to be strong. If you look at mining and metals, that's silver, gold, palladium miners. That continues to be a leading theme. And remember, this is the top 7 out of 40. So anything on these lists is pretty significant, is in the top 15 or so percent in terms of price action. But we're also seeing airlines come up, which is interesting. Airlines. Let's look at some of these airline stocks, see what we got here. This is Delta. Whoops. Yep, you can see this is breaking out and running. You get Southwest also running. And these didn't form perfect little breakout patterns, but you can really see how it went through this like multi-month consolidation. Just absorbing supply, just chopping around, and then it finally comes in and begins to tighten up, and then, ran that move higher. Let me see if we got a full list of the airline stocks. So Delta's looking like it could be a nice little breakout here. It's just a short kind of 1 week consolidation. Similar with United, American. All these charts are looking nearly identical. SkyWest, JetBlue looks ugly. Allegiant Travel. Textron. This is bookings.com. These don't look really great. And this is kind of a tough area because what you want to see is a group with 30, 40, 50 names in it to really have some options. Expedia, Boeing. Boeing could be interesting here. Now, Boeing, not a high flyer. It's not going to go up 300% anytime soon. But look what we have. You had this pretty significant support resistance area here at about 210. And it collapses down. Look, it's fine. Stuff goes up and down. But when it goes down in a big way, it needs to do the same thing. It needs to come in, absorb the supply before it can go higher. You've got to get all the sellers out of the way. Because if you still got a lot of people wanting to sell this stock and dump it, it's going to keep falling, period. This thing can go to 2 if everybody wants to sell it. It may be worth more fundamentally. But if they're all selling, it's going to go down. So we need to wait until it absorbs. And we kind of gotten that here. See how it sort of come in and tightened up a little bit at a big, strong 3% up day on Friday. So it's going to be something to watch here at the open. And if you bought this, you don't need to risk a lot of money. I always want to put my stop at the most recent swing low. And so with a stock like Boeing, that's going to be right in here. So it surges, it pulls back, it surges. So it should not go back below this last swing low. If it does, that means something has changed or new buyers have stepped in and we no longer want to own it. So if we can buy it in here and put a stop loss here, we're getting into the stock at about a 7% risk. So Boeing, wanted to keep an eye on. Let me drop this down. I'll look at a couple of these at the open. See if we got anything else in the airline space. Trip.com. Now this looks like it's trying to get ready. So again, it's not like to the penny perfect, but you're seeing early signs of that kind of consolidation action. So especially if we can come in and do something like this, that would be really strong for then a breakout through that level. Copa is too thin. Delta we already covered. Okay, let's look at some other areas showing strength. The mining space. Steel. Let me steel. Let's look if we've got a list of steel stocks. All right, we got Rio Tinto. You can see the breakout clear as day there in that one. And remember, when I showed you this, stocks in stage 2, they'll tend to run, breakout, consolidate, run, breakout, consolidate. And so you'll get a couple of opportunities in this. Like here is another one, how it from 64 to 74 comes in, shallows up, tightens nicely, breaks out there, and then is on a new run here. So do I want to buy it here? I mean, you could just hit your wagon to it if you want and trail a stop, but ideally I want to get into these really tight little areas. So Vail's kind of putting in a little flat base. New core. You could have a little pullback buy here in new core. Because you see that same idea, right? Coming in and shallowing up, breaks out, a little retest. So you could take a stab at something like new core and just put a stop beneath that low, not risk a lot of money. Let's look at some other. Cleveland Cliff. Now, this is looking good. See how this one after that again, in a big picture uptrend, but suffered a big sell-off. And when you get stocks that dump like this, you don't want to buy them on the way down. Don't try to catch a falling knife. And you may never, if it keeps going down, fine, I have no interest in it. But if it eventually absorbs, then I want to buy. And just think about what's happening here, okay? The stock falls 40%. Some big guys were absolutely selling this. And so you want to see what it does after that dip. If it falls and then just kind of sits here, well, that's telling you nobody wants it. Even a 40% discount could not entice buyers to step into that stock. It's an egg. It's going to go lower. But a tennis ball does the opposite. It's a discount. Look, they buy it up. It's a little profit and buy it up and buy it up. So this looking really, really good here. Because, again, just a supply and demand idea. You've shaken out a lot of the supply. Okay, now it's absorbed it. The sellers have taken over. It's tightening up. And looking for a breakout here above, call it 13.5. Maybe buy this one at the open. Let's look at CLF. Are you doing this on Thursday considering that's Christmas? No, definitely not. We're taking Christmas off. COGT in the biotech space. Cogent. Yep, Cogent's trying up here. Yeah, Steel Dynamics. Yeah, looking really, just a beautiful uptrend. Look at this thing. Just right there in channel. Doesn't get much better than that. So this is one you may just want to hop on and ride along. But ideally, I want to get some kind of a buy point. This wasn't a great one, but it was something. You got to move. Give me some kind of consolidation. So you got that in here. And this was a much lower risk entry point than it would be just jumping in and saying, let's just see if it goes. Because at least you've had, a couple of weeks, 2 weeks of consolidation here where you've gotten the potential sellers out of the way. If somebody wants to try to go in and big leverage, they got shaken out. If they have a stop loss, they could have hit it. If they just wanted to trade momentum and they'd been going nowhere for 2 or 3 weeks, maybe they just got out. So you want to get them out of the way to get in front of these, which could be strong moves higher. AG, yeah, First Majestic, one of the silver stocks looks good. Look at this pretty consolidation over here. Do you see how clean this was? It goes from 5 to 9. It's like a 60% move, and then just still getting deeper, and then it shallows and shallows and shallows. And look how it breaks out here, nice and clean, and just launches from 10 to 50. It's a 50% move in a month. It then reverses. Now, notice where it held. You got essentially just a retest of the breakout area. So the buyer stepped right back in, tightened up, and then launched higher. So, yeah, it's not everything, but you do have a bit of a consolidation in here. So this is one I might be interested in buying above 17.50. You can probably buy this at the open. AG, I'll put it down. 4 minutes of the market opens. Let's see what else we can find here. This is perfect. Thank you, Tyler. Yeah. So this is a biotech stock. Now, biotech's kind of fallen off here, but it was on the 1 month, but still very, very strong. It's a leading area over the last 2 months. It's the top performing area over the last 3 months. One of the top 4 in the last 6 months. Really, really strong area. So this is a biotechnology stock, SION. We're a $2 billion company, so right there on the verge of going from small cap to mid cap. Beautifully strong uptrend. I mean, it's more than doubled the last couple of months. And then look at this pretty just tightening consolidation right in here to the highs. So this stock, here's how I'd trade Scion. I do a buy stop above the highs. If it doesn't break out to new highs, I don't want it. I need to know that it has fully exhausted the supply, okay? Now, it's got a hugely wide spread. Do not trade this pre-market. I don't know what's happening, but 40 by 52 is massive. But you're going to, you do a buy stop above 45.10. Okay. Meaning buy it if and when it crosses 45.10. Then your stop loss will be the most recent swing low. So I don't think you need to risk a lot. Here's the last press up. It pulled back to 41. So you put a sell stop here just beneath the low at 41.10. And so your risk on this trade, assuming it filled you on a break above 45 and stopped you here, is about 8.5%. And this is the same thing we did with palladium. Tell me going to this stock. I mean, mining and metals, mining and metals, mining and metals, the leading theme. So looked over here into palladium. We saw the big push higher. You can see as I've drawn out that consolidation taking place. Bought here on this breakout. My stop loss was just beneath this low. So I risked a whopping 4.1% on this trade. This has only been 2 weeks, but now we're up 20%. And that's the secret. It's your risk-reward ratio. It's how many dollars are you risking for every dollar you make. You might say, well, a 20% gain. That's not that big a deal, Ross. We don't really care. I'm not bragging on this, but like it's 20% on a 4% risk. So, you know, it's there we go. All right, market's open on this with palladium. Let's take a look at some of these stocks. Scion, are we going to cross? Nope. Opening inside. Okay. No action there. AG, trying to pop new highs. We'll give it a second and see what this thing does. Cleveland Cliffs, gapping up slightly here. Boeing, I think, is buyable in here. That's awesome. ANNX, somebody mentioned. Yeah, this looks good. This is biotech. Yeah, pharmaceutical. Yeah, thinner name. It's a small cap. Only sees about 15 million a day, so it's a little more volatile. But yeah, it looks really, really good. Yeah, I think 200 an ounce when silver settles. Yeah, I think you got a couple of years left on that. But I mean, it's just pushing. Like it won't stop. The 1 minute on Scion. Well, that's just a thinly traded stock. I mean, it just gapped down a little bit this morning. So this is one. I mean, look, it could sit in here for another 2-3 weeks. But I only want to buy it if it's going to break out through that high. Because buying in here is just getting in the chop zone. You know, it could do this, and it'll be bored into February. It could still do this and roll over. But when it breaks through kind of 45.05, 45.10, when it pushes into new high ground, that's when the odds are in our favor. That's when we know we've pushed through all the supply that's been selling over the last 2 months, and that's where we have an edge. How do I do the map? So the map here, this is one of the indicators, trading view indicators. It comes with our membership. If you guys aren't members already, it's $5 for an entire year with our Black Ops service. Seriously, just $5. If you go to tradewithross.com, tradewithross.com, you can get signed up for that, and we'll give you access to this indicator, all our live mentoring sessions, some trade picks, etc. There is a link to do that. Once you're a member, I'll show you what it looks like. This is that page, and I'll send you. We can send you this link, but all you'll do is you'll come in here, put your email address you signed up with, your TradingView username, so we can authorize you, and then you'll just go to this page and go to indicators, look up TA Market Health, and add that to your chart. So you'll notice it's locked here. It's a members only thing, but again, you can get it for just a $5 link. Okay. All right. I'm going to sell out of some of this palladium here. About 50 shares. Let me take down. I'm going to take down 60% of these. I'm just going to sell 30 of these to the market. All right. So I'm going to adjust my stop loss. I'm just going to choke this thing off. If it wants to keep running, great, but I'm not going to let it come back against me. So I need to adjust this to 20 because I just sold 30 of them. So now I got a sell stop for 20 of them up in here, should it pull back. And what this is called is improving your worst case scenario. Remember, we risked 4% on this trade. I just sold 60% of it for a 19% gain. And worst case scenario, it falls here and I only make 12% on the rest. So we can't lose at this point. Gold looks beautiful. Been looking for a time to buy gold. This is the time to do it. Gold breaking out here. Oh, this is lagging because the futures. There's GLD. So it's gapped here on the daily, but you can see the exact same thing. See the shallowing, nice. And you really could have bought it right here. But, we're only, what? 3% above the proper buy area. So this is still absolutely buyable in here. Picking up some gold. All right, Scion. So Scion's not ready. This is why we wait, right? If we just bought it up here and we're sitting down 4 or 5%, it's not fun. Most of these, when they break out, should go immediately. All right, Cleveland Cliffs breaking out. So where would we put a stop loss? The first thing you want to ask yourself when you buy a stock is where you're wrong. What price does this thing need to fall to say, nope, that's not what I wanted, I'm getting out? And ideally, we want to use that swing low. In this case, it's a little bit big. That's going to be about a 11% risk. So what I'll do instead is try to find a big, it's the same one. You may just arbitrarily use 7 or 8% or something. 7% to get you here. So here's how you do that. All right, just going to come in here and buy some and just say you're going to get, 200 shares. All right. Tight spread, 1361 by 1362. Go ahead and take it to the market. All right. And then I'd come in here and put my sell stop. I'm going to say just about, let's see, what risk is that? Maybe 1260, risk about 7% on it. So you make a sell stop order, risk about $1 a share, make it good till cancel. Because the time in force, if you do a day order, if it doesn't stop you out today, then come tomorrow, you have no stop. GTC means it stays on the books until you cancel it. So then I just place a sell order there. I don't know why it's not showing up. It's not showing up on the chart here. But I did it at 260. No wonder. Yeah, that's not giving much protection, is it? Let's bring it to where we wanted it to 1260. 60. Okay. Okay, there we go. SBSW. This is an ADR, meaning it's a foreign stock traded as an American depository receipt. It's ripping. You could do an opening range breakout on it if you want. 2, 3, you have to buy already. You'd be in it now. Now, when you get a big gap like this, especially in a name that's breaking out to highs, I think the buy point of this would have been either here or here. But, yeah, you can put a stop to the low of the day because if it's going to gap and run, you shouldn't need to give it much risk. Nuvation Bio looks strong. Vera, yeah, another nice one. Do you see the breakout here? See how clean this was? Look at how you just had this beautiful little tightening pattern. It comes, waits a couple days, and just launches. I mean, picture perfect trade there in Vera. I'm trying to find them at key points here. Rivian, yeah, Rivian looks good. This one we looked at last week. Now, remember the 4 stages of the stock cycle I showed you. Remember how stock goes into stage 1, 2, stage 3, big stage 4s, and goes back into 1 and repeats? Look at Rivian here. So this thing kind of IPO'd into hell in the bear market, gets sold off into a big stage 4, and it's been down here chopping for a couple of years. And then finally breaks out into a new stage 2 uptrend. And it's just, yeah, it's been ripping. I mean, 15%, 10%. I don't know. There's some news on this. They're doing something. They got some kind of development people like, and it's soaring. HYMC, oh yeah, wow. Highcroft Mining announced high-grade drill results from its Vortex Silver system. Oh, that'll do it. Let me see how wide this is. A little wider than I'd like, but you can let's just take like 50 shares of this. We'll do an opening range breakout. March, we're long 50. Now, when you do an opening range breakout, I always want to put my sell stop to low of the day. All right, so the low here is 2015. Let me bring it up to like 2010. And all you're doing with an opening range breakout is saying, okay, this thing just made a big overnight move. And when a stock gaps like this, when it closes at 17 and opens at 21, it means there's a big gap between the closing price and the open. It's going to do one of two things. Very, very rarely does a stock gap up this big and just sit there. If it were to come up and gap and just stay here, that would probably mean the company got a buyout, right? They accepted a buyout at $20 a share. It jumps to 20 and just stays there because there's no more upside. But that's not the case here. So the stock is either going to gap up and run, like this news. It's up big in the morning on the news. People are learning about it as the market opens. It's hugely bullish. They're going to buy, and this is the start of something big. Or the stock gaps up on some good piece of news, and everyone goes, all right, that's it. That's way more than it's worth. I'm going to take my profits, and they sell into this, and it just declines downward. It's got kind of a gap and crap there. So one way to play this is to, on the gap, set up a 5-minute chart. These are 5-minute bars. And draw a range on the opening 5 minutes from the high and the low. And what you then do is say, okay, we'll give it 5 minutes to trade out, to let the people who want to take profits take and the buyers step in. We'll let it settle out. And then from there, if it breaks out above, I'm going to buy it. That means it could be a runner. And my stop loss is at the low of the day. Never below, never more than that. And this was a bigger range than I'd like. Obviously, we got in here after 5 minutes, so I'm a little bit higher than I would like to be. But this would have been like a 9 or 10% risk. So that's on the high side for an opening range breakout. But you're talking about a stock that's up 130% this month. that means it could be up another 130 next month. So I'd be willing to take this kind of risk. Now, I did it on a smaller size, only got 50 shares, so it's like $1,000. It's really nothing in this. But that way, you get the thing right. And if it keeps rising higher throughout the day, come near the close, you'll just bring your stop loss up to break even. And say, all right, I've got a risk-free entry. I wrote it during the day. A stop loss is where I got in. I have no more risk. And this could be the start of a huge move. Like, you go back and look at Tesla does this on these gaps. Like, here's what I was looking for. So if you look here at Tesla, this is last year. But this is what we were looking at the time, was the fact that Tesla made a big move. This is a 80% move in a couple of months. It then comes in and shallows, like, all right, we're going to buy on a breakout above here. But instead, it gapped up. It opened the day here. So you did a little 5-minute opening range breakout. You got in here. Your initial risk on this thing was like 3%. And it just soared. That was, in fact, the start of a really big move. So on a 3% risk, you made as much as 66%. It's a 22R move. So that's all we're trying to do with this. So our palladium trade, this is from a couple weeks ago. Still doing well. We took some profits on that. Cleveland Cliffs, we just bought this morning, hasn't moved yet. But again, should be the start. The only thing worrying me in Cleveland Cliffs, we do have a bit of supply in here. All these people who bought in October, who've been underwater for the last 2 months, are going to form some supply. They want to get out of break even. And so we do have a bit of an obstacle there, but we'll see how this one plays out. And then the other we just took was this HYMC, trying this little opening range breakout trade. And so far, it's doing pretty well, up 5%, 6%. What are we up? 5% is the first couple of minutes. Now, again, I did a little baby trade. I should have put more on. I was just trying to show how this works. But in terms of percentage, 5% in 5 minutes, a pretty strong little move. So now it's ripped higher. So now I'm just gonna bring the stop up to here. We're going to tighten this thing up. Okay, so we took our maximum risk from 10% down to about 6%. And hopefully, this is the start of a strong move throughout the day. CYTK breakout just now. Let's take a look. Some others. Yeah, maybe. It is having a strong morning, I'll give you that, but I wouldn't really call it a breakout because it's, I want to see these like tightening. I want the price action shrinking. This has been kind of widening the last couple of weeks, so maybe on a move in here, but wouldn't be my favorite setup at the moment because it just, I want to see like a wedging pattern. I want it tightening up. What I don't want is the opposite of that. I don't want it like widening. I don't want volatility increasing. That doesn't show me that the supply is being absorbed. ANNX, yeah, this looks good. Really, really strong move on Friday. Peppering back into the highs. You could probably buy this one in here. It's a little bit more volatile. It's a small cap, so I'd want to risk maybe 12% to really give it some room. But you could probably get away with maybe a stop at 485. Below Friday's low to see if this thing's going to run. SEV, is it a POS? Promoters, yes it is. Tiny company, 130. It's not even big enough to be considered a small cap stock. So it's a micro cap stock. Solar powered battery electric vehicles. I mean, I've never even heard of it. I'm a big car guy, so I don't know what this is, but it's really small startup. Yeah, DC Gold this morning. All right, Matt, good. How long would you hold SBSW? I mean, I'd hold as long as it's running. I don't know much about this. We got a precious metals company, 9 billion, so a good size. Where are they based out of? South Africa. All right, that scares me already. Um, Iridium, nickel, chrome, copper, cobalt. I mean, look, as long as it's showing strength, I'd hold with it. I would just drag the stop loss up along the way. You know, if your stop loss was here and it's now broken out, we'll bring it up in this region. It stalled for a couple of days in here, broke out. Okay, I might bring it up to like here. And just once it consolidates, see, ideally what you want to have is what's called a natural reaction and then raise the stop. So here's what I like to do. The stock will come, it'll consolidate, it'll tighten up, it breaks out, it's going to run. Eventually there's going to be some profit taking, little natural reaction, and then push to new highs, okay? And so my buy point initially is here. My stop loss initially is here. All right, so I'm trying to get in really tight. I'm only risking about, in this case, the percentages don't matter because I made this chart up. But it runs. Okay, great. I might sell a little bit into there. It pulls back. Once it gets above here, once it makes a new high, and it is made the natural reaction and then broke out again, at that point, my stop loss is going to here. And so all I'm trying to do is catch a big runner that should run, consolidate. And each time it consolidates, we've exhausted those sellers. I'm now raising my stop loss to there. And the goal is to consistently improve your worst case scenario, put a stop in each, so that when eventually it does roll over and blow through, you're out up here, not over here whining and crying, saying, why didn't I get out the top? Right? IREN's taken off. I guess you could call it that. I mean, it's up big from the lows, but it's stocks. I mean, it's in decline. Look, maybe this is the bottom, right? Maybe this is. It is absolutely possible. I'm not, anything I tell you here is not the stock definitely going lower. I'm trying to just find opportunities where the odds are in my favor. And look at the difference here. Whoever mentioned IREN. S. Daniels. So see, the stock was in a decline here too. But then it came in and absorbed and tightened. You could even have drawn this down in here. If you look at how it sold, and then you need some confirmation that it is done. And so that would have been a good buy point. This would have been a good buy point. If you want to get them off the lows, I fully support that. You just need signs that it is consolidated. And I don't think we have that. Like we have, 3 days down here. Maybe that's all we get. It's possible. But I'll tell you what would get me into IREN is if we had this. True signs of absorbing the lows. Then it's a phenomenal buy point, right? Ampex, not even close. I would short this. Circle. Yeah, Circle started to look good. Now, I did a video on this. I'm not a big crypto guy. I did a lot of research on this. I find it interesting. Now, a lot of people in the comments said, what you're describing is Ripple or whatever. So maybe I don't know that. I'm not the crypto expert. I'm just a price action expert. But yeah, so this has been in steep decline, right? If you don't know, this company came out. They got this stable coin. It's got all kinds of government regulation. They can be held by these big funds where others can't. So it's got a lot going for it. And the story was so strong. This thing IPOs jumps to 70, from 70 to 300 in 2 weeks, quadrupled. And then the selling started. And, I was looking in here for it. I said, oh, okay, we could have a little breakout here. Look, it's consolidating, right? It's tightening up. It's beginning to convert. And then what did it do? It didn't break out. It started getting wider and then sold some more. Okay, it's not ready. Didn't buy it. So now we have this again where you finally got some signs of absorption. Stock's coming in. I'd love one more little tightening. We may or may not get it. But yeah, you could buy this on a break here. And if you did so your risk could be big. It's like 18% to the swing low. So if that's the case and you got to take more risk, you just do a half-size position. But this is what I'd love to see. Because if it did that and bought in here, well, then I could get a nice, tight little, 6-7% stop. And if you can risk 7% on a stock that can triple or quadruple in a couple of weeks, you get a couple of these right, you're going to do extremely well. He's doing well. Thank you for asking about him. My son's doing great. Thank you. My daughter was the one in here, the fever, but yeah, they both I got a 3-year-old girl and a 6-year-old boy, so busy time, as you can imagine, at the Gibbons house for Christmas. AGI, Alamos, wonderful. Looks great. Yep. I'd buy this, but a stop at the low of the day because it's a gap and run. So this would have been a great one for the 5-minute opening range breakout. See how the stock gapped up like 3% overnight? Take the first 5 minutes. 1, 2, 3, 4. Let's just go to a 5-minute chart. 5-minute chart. There's the opening range, the first 5 minutes. So I bought it here at 40. You can still get it now, just a little bit above. Nice little tight risk. ABBNY. Electrical products trades over the counter, 134 billion. This is a big guy. Motion automated solution. Okay, I don't know much about this stock. Yeah, big uptrend, and I agree. It does look good. I mean, resistance is clear as day. Get the big sell-off, and then look at how it tightened right up. And this is what you want to see, and I know y'all are tired of hearing me say this, but I always say you want to buy tennis balls and sell eggs. You want to wait till the stock pulls back? Okay, great. Eggs just splat. If the stock falls 10, 20, 30, whatever percent, and just sits there, that's telling you nobody wants this crap. Even on sale, they won't buy it. And if they don't want it, I don't want it because they're the ones that move prices. However, if a dip is met like a tennis ball and they take advantage and buy the hell out of this thing, that's telling you that the stock is still in demand. And all you've done here is shake out a bunch of the weak hands. So those shares are further consolidated into the strong hands, the ETFs and the mutual funds and the endowment funds. The folks who aren't day trading with a stop loss, they're position building to hold for quarters on end. So yeah, this looks really, really good. I agree. Taiwan Semi. Whoops. Oh, TSM. I put TSMC. Okay. Yeah, it's consolidating. This isn't a great buy point to me. I don't think it's ready. It looks a little early. You can see the markups here. This thing doesn't always shallow out nicely. You see, just had this flat consolidation July and August. And so, it's entirely possible we just get something like that again, but it just looks like it's kind of in a choppy range. We got a market up at the highs, this thing just kind of bouncing around. It looks fine. If I owned it, I don't see any reason I would sell it. It just doesn't look like it's primed for a big move here. Somebody said there's big insider buys in HYMC. I'm not surprised. So now we're up 8% on this thing. And so I liked it. Look, I'm a chicken. All right, I'll go ahead and tell you, I'm a total chicken. I hate losing money. That's why you'll never see me with these 20% risks and all. So I'm like, okay, I just choked this thing off. I'll bring my stop loss up here to pretty much break even. So now I can't lose. Now I got a free trade. Is it possible it comes down and I make nothing? Sure, but I have no risk anymore. And this is the position I want to be in. I want to be in a stock where I have no risk and lots of upside. Okay, let's look at a couple others. Newmont, what do you mentioned? Whoops, that's a 5-minute. Yeah, Newmont looks good. It's early stages of a breakout. I talked about this one, I think, in last week's video, how I liked it for the mining space, and you see this just absolutely perfect shallowing breakout action. See how the dips get. I mean, look at the drops here. Look at the drop. So it fell 23%. Next one, 13%. Next one, 5%. See how it's shallowing? They're getting tighter. So really, really clean. Blew right through the top. Stalled a bit here at 100. This is very typical at the big century marks. So $100 a share, $200 a share, $500 a share. They're just big psychological levels. And the reason they're significant is just so dumb. But someone's going, all right, if it gets to 100, I'll sell it. Right? If it falls back below 100, I'll get out. Right? It's just a big, clean area to sell. But it does what the gold and the others have done. It's these nice, big, clean, shallowing breakout patterns, goes on big runs, shallows out again, so it's starting a new one. So yeah, I think Newmont looks great. In phase looks good. Yeah, so this is one. So we looked at this back in October, thinking we might get this, and notice it didn't, which is fine. This is why we're picky. We didn't buy it, and if we had bought it here, well, we'd be down 20%. So no risk. But yeah, it's trying in here. I think what you're looking at is this, and saying, okay, well, it's come in, it's starting to shallow and tighten up here. Yeah, you can make a case for in phase. What scares me at this point is how much supply we have. I mean, you've got everyone who bought July, August, September, October, November, all these people have been underwater. So this is a big supply area. There's going to be a lot of people wanting to sell in here. So just be careful. I mean, I'm fine buying it off the lows if it went there quickly. Like, what was the one we looked like? Okay, at low. Where was the one? Okay, so like let's compare that to this one, right? So see, this was forming that pattern off the lows, right? Same idea. It's coming in and shallowing up and tightening, but like it blew through here quickly. Like we're only worried about people who bought like in this kind of 2 or 3 week period. So that's less supply than in phase, where we've got everyone who bought in the last 6 months. You see the difference? So it could absolutely work. It wouldn't be my favorite. USAU, oh yeah, big mover. Nice little just cup with handle coming out here. Nice and clean. Boom. 12% day, another 7.5% today already. Wow. Monstrous. Yep, really clean. Would have been a good opening range breakout one on that gap. Gold just looking real strong. GSAT. Yeah, nice recovery. See the drop just bounced right back. Looks really, really good. Yep. Risk 7 or 8% or so. See if it keeps running. Guys, by the way, if you haven't already, go to tradewithross.com. We got this one back on the Traders It's a YouTube channel today. I did it on my own personal channel. If you just go to YouTube and search Ross Givens, you'll see my channel. I put a lot of stuff on there, so be sure to subscribe to that. But got a strike doing these live for whatever reason, just some automated thing. So we may have to go back to doing these only on Zoom. If you want to be sure you can join us every single Monday, every single Thursday for an entire year, it is $5. Go to tradewithross.com, and you'll get access to these industry strength indicators, the market health indicator, the live mentoring sessions. We put a big picture trade out every month or two. You have access to our support team and tons of other value there. It is just $5. So it's the only thing you're probably going to buy that's cheap this season. So if you want to join us, go to tradewithross.com and get signed up, because I don't want to lose you next week. CIEN, yeah, looks wonderful. Looks great. And here's the thing, like, we're going to look at some, like I showed you some patterns that are picture perfect. And you look at this one, you go, like it looks all right. Breakout, retest. But here's the thing. When you have a stock market at all-time highs and climbing, if you have a leading area, a leading theme in that bull market, whether it's the mining and metals space or it's biotech, whatever's really strong, and then you have a top stock in that group, you can be a little sloppy with this stuff, okay? Just find something, some little period of consolidation, some pullback to support, something to keep your risk down at that 8 to 10% level. Johnny, you're up 20% on USAU. Perfect. Good job. Let me see where you bought it. Oh, you bought it down in here. Did you buy this? Did you buy this little breakdown in here? 25%, something like that. Yeah, it looks good. Good job. APLS. Yeah, I wouldn't buy it. If I did, the only way I'd buy this would be bracketing this range right here. Because you do have about a 2-week consolidation. So I would buy, if I were to buy this, which I'm not. Oh, come on, don't do that to me. I would buy a breakout above here. So I'd do a buy stop at 26. And I'd put a stop loss here to risk about 8%. But this would not be a stock I want because it's wild as can be. I mean, this is a 50% move, a 30% drop, a 50% move, a 30, 40%. Like it's wild. It's all over the place. It doesn't look like it's consolidating. Now compare that to what you had over in here, where the price action tightened. Coming in, still getting looser, and then tighten, and then 2 weeks of tightening, and then really clean breakout through very obvious support at about 20.5. So that was a much better setup. But now it's widening. It's all over the place. So wouldn't be my favorite pick. Not saying it's a bad stock, just not what I look for with my strategy. KOD, thanks for that one. You bet, man. Yeah. So this is one we did in the 2 trades. It broke out here at 21. You're up 30%. It's been a month, right? So it's done really well. Now, how do we get into a stock? How are we up 30% in a month? Well, pretty simply. We took a bull market. We look for the leading groups, which at the time, I mean, biotech's still very strong. Best performer over 3 months. Best performer over 2 months. We're the top 5 over 6 months. At the time, it was even up here on the 1-month list. And so we had this stock, Kodiak, making huge moves. I mean, look at this. Went up 118% in like a week. Clearly, big guys are buying that. So you just wait until its supply is absorbed, till these pullbacks shallow and tighten. We bought the breakout here. The stop loss was, I think, here. Maybe tighter. I forget exactly where it was. And you're up 30% in a month, right? That's the formula. It's not overly complicated. People just don't usually have the discipline to do it because, like, y'all are firing in a bunch of stocks, right? And your friends go, what about this? I heard about this thing. I heard about this little company. It's like, yeah, that may work. But if you want the odds in your favor, if you want the best chance of getting into these right before a quick move where it just goes nothing against you, 5% stop, you can hold it. You want everything at your back. You want a bull market. Can you make money in a bear market? Sure, but it's a heck of a lot higher. You want a leading group. You want to be you want to be buying stocks in the same sector as Buffett and Goldman Sachs and BlackRock and all the big funds. You want their buying power to be the wind at your back. And then you want to buy at these places where the supply has been absorbed, where you have some kind of an edge in that they've bought up so much stock, there's not much float left, and it can move quickly because the same amount of buying is chasing a smaller pool of shares. That's the formula. And listen, you can buy pullbacks, you can buy 3 weeks tight pictures, you can buy a cup with handles. There's lots of stuff you can do, but picking the right stock at the right time in the right group, that's 80% of the work. Everybody loves to study chart patterns, and I'm doing them too. I like them. But they're doing them on the wrong thing. You could find the prettiest setup ever. But if you're in an area, if you're buying, let's say, solar stock, it's a perfect breakout setup. But the solar sector is declining while the market's going up. Money's flowing out of that area. Well, you've just cut your odds of success by 60%. Okay. Well, good. 80 stocks up, 13 down. You get a lot of names. Swedish manufacturing. All right, let's look at some others. IonQ, you're still in it. Okay, IonQ stopped us out from 2 weeks ago. This is one. So if you're still in it, you're up. I tried to get a little fancy, and I tried to buy this little entry right here. So we had a big picture breakout here in September. It exploded. It sold off. And what I saw was this little, said, all right, we can trade this one pretty tight. We risked 8 or 9%. It just barely hit that stop loss. That's really frustrating, but it's fine because it didn't work. I mean, I thought it would do this if it was going to work. So it's come in, and we may have just been early. It may, still be setting up, and that's fine. I'll absolutely take it again. If it continues to do this, we tried to get in a little too early. Maybe it ends up being a move more like this. If that happens, you better believe I'm going to trade it again. Because look what it does when it breaks out. I mean, it went up 50% in 2 weeks. Like, I'm fine taking a 7 or 8 or 9% hit on these if when I get it right, I'm up 50%. Because that means I only need to be right 1 out of every 5, 1 out of every 6 times. So I lost 7% on that one. I'm up 20% on palladium, or 18%. It's a net win, right? Okay. There's some others here. I'm trying to go through there. How about IOVA? Yeah, maybe. I think it's still early. I see what you're seeing. It's just it hasn't cleared through all these highs. But yes, it does look like it's trying to finish up a stage 1 base here. Is 91 a buy for Circle today? You could do the 91 buy. I mean, it's riskier because it hasn't consolidated as long. The tough thing for me is, again, my first question is, where's my stop? Where am I wrong? And where would I like to put it? Well, I'd like to put it down here to swing low. That's what I typically do. And if I bought at 91 and my stop was here, it's an 18.5% risk. I'm not taking 18% risk. I don't lose that big. So for me, I'd like to see this. Because if it does that, I put my stop loss here or even up in here. And so instead of an 18.5% risk, this would be a 9% risk. If it did it again, I mean, I could get that risk down to 5%. If I buy Circle at a 5% risk, I'm going to do it 8 days a week, right? So, it's not that it's a bad buy here. I mean, on a breakout above 91, of course, you want it through there. It's just that I'd need to risk a lot of money. So I'd have to just kind of arbitrarily toss a stop in here at, 9 or 10%. And putting your stop beneath the swing low greatly improves your odds because it's already rejected that area once, right? They sold it down to 63, buyer stepped in. This time they sold it down to 75, buyer stepped in. So we know that's an area to be defended. So if it could do this, terrible drawing. But you see what I'm saying. It sold off. Buyer stepped in at 83. Great. That's a defended area. That's where I can put my stop loss. So not bad. I would like it to be better. Boyle. Ultra Bloomberg Nat. I can't believe this is happening. Yeah, Nat Gas. Was it NLG? No. UNL. There it is. That's natural gas. Yeah, I'm surprised this big sell-off in natural gas because the fundamental story is there. It was going to be sort of the short-term solution to power these data centers was natural gas. And we started to see it coming up off the lows in a pretty big way, and it's just tanked. So there must be something we don't know going on in the natural gas market. When do you plan to sell the physical metal coins that you bought? I mean, never. My goal is to just have an anchor position, like have, a couple 100,000 in physical metals. GEV is looking like a tennis ball. Yeah, nice bounce off there. I agree. It's still kind of in just a chop zone. Nuclear stocks have been cooling, but yeah, I see what you're saying. Newmont, what's an entry point? I mean, you can buy Newmont right here. If you buy Newmont, just risk about 7%. I put a stop at 96.5 if I bought Newmont here. Maybe get a little bit more room, put it down to call it 96. All right, so you risk 7%. But I think Newmont is a fine buy here with a 7% risk. And, when you look at Newmont, what it does when it breaks out, usually it goes on as a 60% run. That was about a 60% run. So, yeah. And it's going to go with gold. Gold gapped. The trend is there. The government keeps spending and printing. The Federal Reserve is printing money again. We have $2 trillion in deficit spending. The world's getting out of the dollar. Like central banks are buying more physical gold than they've bought in decades. That picture is really clear. So get a gold position, buy some miners either way. Number one, silver play. I mean, I would stick to something like First Majestic, AG. It's the big silver miner. If you want a basket of silver miners, go to SIL, the Global X Silver Miners ETF. And, if a metal makes a move, typically the miners, the companies mining that metal, will make an exaggerated version of that. And so I'll show you what I mean. Like let's plot SLV, the ETF for silver on here. Okay. So this was not as extreme surprise. Silver's kind of moved with it. I mean, you can see silver here a little bit lower. Yeah, silver miners move with it pretty close. Normally, if you look at gold, like if you look at GLX, the silver miners, no. GDX, the silver miners ETF, or the gold miners, I'm sorry. Then you overlay gold. It just moves a lot bigger. So like gold here is up 60%, the miners are up 130. If you take it from this breakout here in August, if you'd have bought gold, you'd be up 30%. If you'd have bought the miners, you'd be up 60. It tends to move exactly. I'm surprised at silver miners. Here's my guess for that. Silver mining, there's very few companies that just mine silver. Silver is usually one thing they mine, along with steel or copper, iron ore, and gold, etc. There are, however, a lot of direct gold miners. And GDX owns most of those stocks. But it just like the profits are bigger. If gold goes from 4,000 to 5,000, it's a 20% move. But their profit margin might be up 40, 50% because of it. But yeah, something like AG is probably what I do. I mean, AG is a big silver miner. Is a perfect buy point now? No, but you do have about a week of consolidation here, so you can risk 10, 11% on this thing. Merck. Yeah, Merck's trying. It's not one of my favorites. This is a big, bloated pharmaceutical company. I hate the pharmaceutical companies anyway, but, even a big ripping move back to the highs is only about a 25% move. So it looks fine. Does it look like it's going higher? Yes. Is it one I'd want to buy? Not really. Energizer is one of our recent insider buys. You can see, again, it tried to consolidate off the lows. It's just kind of chopping around in here again. Technically, I don't see a lot, but we do have heavy insider buying, which is why we got into it. SMR looks terrible. Now, this was one of my favorite stocks last year. We bought it on this breakout in here. We bought it on this breakout through here, right? That was a 100% gain in 49 days. That was 170 in 2 months. We bought it here. It went up 140 in 42 days, like gangbusters. But I don't like this stock now. And I don't get attached to these. Somebody put it in the comments that Ross date stocks and marry. That is 100% true. I date these things. I don't marry them. I'm not getting attached to any one of these stocks. I like it that has a good story. That means everyone else is buying. I like the macro theme, but I'm just trading it. Did this company do something to make it worth 180% more during this 2-month window? No. But we had a ton of demand. Supply had shrank. It went to a price that's probably well above what it's worth, and I'm going to take it. Right now it's lower lows, lower highs. Like it's making new 52-week lows. Well, just about. It's making new 2025 lows while the market is at highs. Nobody wants it, at least not right now. Now, it's 100% possible and even probable that this stock will eventually find some buyers, tighten up, absorb supply, become cheap, release a couple of developments in their small modular reactor, maybe do a big deal with one of the big tech AI spenders and it breaks out, I'll be happy to buy it again. But right now, when I look at this chart, all I see is people hate this stock and they want to sell it. And if everybody wants to sell it, I don't care how good the earnings are. I don't care how good the story is. I don't care who the CEO is. If everyone's selling it, it's going to go down. And until that changes, I'm not interested. All right, we'll do a couple others here. By the way, guys, again, the link is tradewithross.com. If you're watching this on YouTube, we are trying it here. We did get a live stream shut down a month ago. I did the exact same thing I'm doing now. I don't know why, but it was. And so we've been doing the last couple of months over Zoom only. If that happens again, we'll resume that. So to be sure, you can join us every single one of these live sessions with me. We have another members-only session over Zoom every Thursday. Go to the link, tradewithross.com. Get signed up. It's just $5. No strings, no renewals, nothing. $5 for an entire year. We'll give you access to these trading view indicators. We'll do the live sessions. You'll get my weekly newsletter where I share my views on the market and share some stock picks. Tons and tons of value. Like, I'm not getting rich $5 at a time. It's just, a way to show people that are serious. So if you're interested, go to tradewithross.com, get signed up and join us. I promise you'll get every penny of your value. And if you don't, I'll send you the $5 back myself. Quantum coming back on a 1 month. You're right. Seeing that come back in play. LEU. Yeah. Centrus is trying one of these nuclear plays. I think they're just overwhelmed with sellers, And so this one, like others, I would love to see do something like this and tighten up a little bit for me to get ready for a move higher. Is CDE a good buy entry? Yes, perfect buy entry on Coyer. CDE, this is one of the other trades I mentioned last Tuesday. I guess the textbook entry would have been Friday here at 18 and a quarter, but it's about $19. I think you can buy Coyer here. I would probably risk 10%, put a stop at like $17. That's going to get you just below this big Friday up day. So look at Friday. It's up 6% on the day. Look at the volume down here. Big, heavy buying volume. And if you look at where it closed, you guys probably prefer candlesticks. It closed right up here at the highs. So these are all three strong signs. Big up day. Happened on big volume. And it closes the high of the day. And all things being equal, put this in your quiver. A stock that closes at the high of the day has a much, much better chance of continuing the following day than one that closed at the lows. The closing price is where it settled. That's who won the war that day, and the bulls won that war. So, yeah, this looks great in here. So, buy it in here, put your stop loss. Just put it to low of Friday. Because it's a little bit above. The perfect buy point would have been here. It's a couple percent above. We don't want to be a DICK for a tick, as Carter would say. So, yeah, put it right in there. But yeah, I think Coyer looks good. All right, a couple others, and we'll go ahead and end this thing quickly. Sorry, trying to catch up. KTM Pool, love the sessions, finally making money. Awesome. Thanks, man. Newmont call. I mean, if you want a call option, just go out a couple of months. Go look at, I don't have the option prices up here, but I'd be looking at like maybe a March, 105, 110, something like that. DJT did a tennis ball. Oh, yeah, big tennis ball. Now, this is all news-based, however. This is based off that merger they're doing. Make no mistake, DJT is an absolute garbage stock, and that's not a knock on Trump. Trump doesn't have anything to do with this company. But, okay, I'll give you an example. This company's worth $4.5 billion, okay? Last quarter, they did $1 million in sales. Not profits, total dollars in the door, $1 million. So they're bringing in, what is that, $300,000 a month? And the company's worth $4.5 billion. It's a meme stock. That's just all it is. So, trade it accordingly. Trade with Ross. Yeah, there it is. TradeWithRoss.com. Who dumped 9.8 million in DJT? I don't know. Maybe what's his son's name? Maybe Barron. QBTS looking good. Yes. Yeah, you could buy it here. This is a nice little cup with handle. And look, look for significant areas on the chart, okay? And it's not going to be to the penny. Some guys, well, look here, Ross, you said 30, it went to 29.5. Yeah, I know, the markets aren't perfect, but look here. It rips from 15 to 30. It doubled in 2 weeks, and that's where it stalled. It goes 30 to 50, comes all the way back down and stalled there. Tries, fails again, stalls there for a week. Then capitulates, comes back up, stalls there. Right? $30, 29.5, whatever this is right in here. I mean, just draw it like a box. Put a little, call it 30.5 to 29. It's a very significant area for the stock. So when it breaks below it, either get short or get out. When it breaks above it, buy it. So yeah, I think you could buy QBTS here. In fact, I'd just do a little low of the day stop, risk about 10%, see if it's the start of something new. Isn't it cleaner with the bars? Everyone loves the candles, but I'll be honest, I've been doing this for over 20 years. When I started, I was using candlesticks. I had 5 or 6, 7 different indicators. I'm throwing, watching the VWAP. I'm looking at the volume profile. I'm tracking the moving average trends. I mean, all this stuff. And then I turned it all off. And I've traded better, more profitably than ever. And it's twofold. One, I don't see the red and green bars that give me, I see too much red, whatever. The other thing is it almost makes it like a video game. I know it sounds crazy, but like, if you want to have success as a trader, you have to detach yourself from the money. I don't even know what those trades when I did earlier. How we doing? HYMC, we're up 6%. Cleveland Cliffs is still pretty much flat. The Palladium trade is still up 17 or so percent. But just remove yourself from it. Decide where you're going to buy, where you're going to sell in advance, and just let it play out as it will. All right? Okay, guys, if I could ask you one more little favor. If you guys have gotten something out of this today, especially for our members, would you do me a favor? If you just go to Google and put in Traders Agency, you'll notice we have a bunch of Google reviews there. I'd love you to share your experience with people. Just write a review. These show up in the company Slack channel, so I will see it. I'll be sure to thank you next week. But leave a review, good, bad, and different. Be completely honest. Share your experience. I think it helps people out who consider coming to these. And if you haven't already, please go to tradewithross.com. Get signed up for the Black Ops service. It's just $5. You get an entire year. I can't give you any more value than that. And I'll do everything I can to make you more profitable, less risky, more knowledgeable trader. So thank you all again for joining us here on the live stream, whether you're on X or YouTube. We appreciate you being here, and we'll see you next Monday at the same time.